Hi, good afternoon. Lately, there has been a lot of interest from Singapore-based investors to acquire property investments in different markets, such as London, Hong Kong, Sydney, Australia, or Melbourne, or even in the United States. A lot of the projects that are marketed in Singapore actually based on foreign currencies based out of the respective countries where the projects are based. What I've learned and noticed with a number of friends who have looked to invest in such offshore projects is the inability to review the investment in detail in local currency terms. Today what I want to do is share with you what I use personally for my investments or my offshore foreign investments in terms of how I analyze a potential acquisition, a simple small acquisition of say maybe a 2-bedroom flat in London, and how do I review or how I am able to view and evaluate the data in local currency terms. So I'm going to use a very simple 2-bedroom flat example, a 2-bedroom flat based in Chelsea, London, that I am looking to acquire and be able to analyze this 2-bedroom investment in sterling pounds into Singapore dollar terms. So we have a 2-bedroom flat. We're going to run a 5-year cash flow analysis. And as usual, you have to complete the various tabs in ARGUS to be able to review the outcome of the analysis in detail. I have also tagged on various beautiful pictures of the potential asset that I'm looking to acquire, including floor plans, and eventually the lease that will be signed or executed will also be indicated here. We have used standard typical inflation rates of 3% in this instance. In terms of expenses, we have a couple of line of items which are very typical expenses associated with acquiring residential assets, for example, in the United Kingdom. So we have service charge that is on a basis of £850 on an annual basis. Landlord insurance, for example, so if you are looking to invest in London and you want to be able to insure yourself from any breakages of fixture and fittings or damage to your property, you will look to acquire an insurance policy, say for example on the asset for say for example for £1,200 a year. You will also have say a local letting agent who will manage the property on your behalf while you're based here in Singapore. In this instance, I've estimated a cost of about £2,500 per year. Same for council taxes. In Singapore, we pay service charges to our town councils. It's the same case in the case of the United Kingdom. Here you have to pay local council taxes as well to the respective boroughs where you're based, and in this instance it will be to the Royal Borough of Kensington and Chelsea. We pay £150 on a monthly basis. Now, I also foresee that I may require some new kitchen cabinets for this new acquisition that I'm looking to acquire, because I don't think the current existing kitchen cabinets will last for another 2 years or so if I'm going to let out the property. In this instance, I'm budgeting a cost of about $20,000 here. Okay. Tenants, on completion of the purchase in January 2014, I will be handed, for example, a vacant unit. So, for any respective tenant, what is my forecasted rental that I can expect beginning in February 2014 for a period of 2 years? I have factored in an amount of £1,900 in this instance, incorporating leasing costs, which I'm going to change in a little bit down to 5%, which you can calculate based on percentages or fixed pounds, dollar amounts, or sterling pounds amount. There's also a deposit involved here, which in this instance in London is typical to collect 1 month's deposit which we can place into a local bank in England or even in Singapore in sterling and be able to achieve, say, for example, interest rates of 3%. In this instance, we're buying the property for about £550,000 for the two-bedroom flat. We are expecting closing costs to be at 3.5%. Debt or the loan is expected at $412,000. I can also use the loan to value to calculate the loan in this instance. In terms of interest rates, I have factored in typical fixed rates for buy-to-let mortgages that you'll find in the United Kingdom for 3.69, and subsequently that will revert back to a tracker rate of, say, 4.99. Okay. Valuation. So if we look at the direct cap basis, based on first year NOI, which is based on the leases that I have modeled, and that's the expenses. The balance is the net operating income works out to about £12,705, and if I use a direct cap of 2.3, the value is at close to what we're expected to pay at about $550,000. So our yield or cap rate here in this instance is at about 2.3%. We are going to run a discounted cash flow model as well, and we are going to work out the resale value at the end of 5 years. In this instance here, we're going to use a cap or yield of 4.9, and we're going to look to sell this property, say, at the end of 5 years of this investment for about close to $600,000. I'm also in this instance using a discount rate of 3.75 for my discounted cash flow analysis to work out the present value of the investment that I'm looking at. And once you have got that, that's it. So the rest of the data is automatically populated by ARGUS. If you notice, the currencies here are all showing in sterling. Okay. So effectively, my net operating income for year one, after expenses, is hovering at about £12,000, lasting out the capital costs, and that it actually leaves me in a negative cash flow after incorporating or factoring in my cost of debt. The rest of the present value analysis is pretty clear. The recommended hold end period in this instance is November 2014. It effectively means that the best time to sell over my 5-year period is somewhere around the end of next year when the IRR is at the maximum. Debt financing here we have modeled earlier. It is working out to about £2,100 a month, which I'll show you in a minute how that's derived. Market pricing. So market pricing is, now this is a pretty good feature in ARGUS to find. What it does is that once you have the exact or accurate postcode, it kind of pulls out the market data. In local terms, we use SRX to mine for market data, but if you're investing in international markets, you want to be able to plug into platforms that are able to do comparisons for market data in their respective countries. Property reports. So we have a set of cash flows here that we have built as a result of the investment. So they're all in sterling. If you look at it carefully here, all my information is reading in sterling pounds. So my executive summaries, again, you have your calculations clearly listed out here, your IRR, your returns, your valuations, and your optimal sale date and the IRR around it. For valuations, again, we have our sale proceed calculations at the end of that 5-year period. What would be the best price to dispose the asset? 10 reports. Now, my 10 reports again are showing in sterling. If you notice the headers here, they're all reading in sterling pounds. So effectively, what we've done is that we've built the whole investment analysis in that respective base currency of the country that we are looking to invest in. Even down to the loan or the debt, you can see that the loan and the debt is being calculated on a month-to-month basis in sterling pounds. All right, and same for the property resale. Now, how do we view this entire set of analytics that we've just undertaken for this 2-bedroom investment property in Singapore currency or Singapore dollar terms. So all you have to do simply is you click on the report tab in ARGUS DCF 16, and you simply run a cash flow analysis. In this case, it's a 2-bedroom flat that we have just modeled. We can look at the base scenario being in Singapore dollars, and in the same instance here I could open up a comparison in that local currency terms based in sterling. So effectively my London property investment portfolio that I've just simply modeled, a 2-bedroom flat here, which is in sterling pounds, I could look at the same cash flow equivalent in Singapore dollars. So effectively it kind of gives me a bit more of a clarity in terms of, in local currency terms, how much in this instance do I have to fork out for my foreign investment. Another good case study or an example of a report here that I would like to share with you is your debt summary report. So in this instance here, if I was to change this to today's date, my scenario currency is in Singapore dollars, and if I choose to run the same debt summary in local terms in sterling, there you go. So effectively I've borrowed 412,000 on a monthly principal payment of 840, monthly interest rates of 1269, and equivalent in Sing dollars it is 1,726, monthly interest payments of 2,607. So if you're looking to make up the shortfall in your cash flows for your investment asset, a report like this would be a good set of analytics to provide you a bit more clarity in terms of in terms of local dollars. So effectively what you have is a whole stack of reports here where I could build a file in sterling and be able to view my investment in local currency terms and even run comparisons between various portfolios in different countries. So I could be looking at leasing, I could be looking at the operation side, I could be looking at my debt, and also my return calculations effectively. And I hope that brings us to the end of my short review on explaining how we could utilize ARGUS in reviewing some of our offshore investments in Singapore dollar terms. Thank you.